Hi guys, so welcome to another episode of Gibberish with Gerard. So as many of you are already aware, COVID-19 has pretty much wrecked the entire world in these unforeseen circumstances. But its damage has not been just limited to the health sector alone. It has pushed many countries to recessions, and Singapore is not an exception either. So, in fact, Singapore has entered a technical recession after its economy contracted about 41.2% in the second quarter of 2020. And the authorities have further warned that they expect Singapore's GDP to further shrink between 4 and 7% this year. So, what exactly does this mean to us? It means three main things. It means loss of employment, loss of income, and more importantly, loss of savings. And that is why savings are really important. It's there for us to get through these difficult situations, and that's where this entire thing called financial planning comes into picture. And that's why I also personally decided to talk about this topic in this week's episode. And it's also quite apt, that this episode will be releasing on National Day because, as you know, Singapore, takes a lot of pride on being financially prudent, and we have saved up a lot for us to have enough reserves to tap on during emergency crisis situations as what we are going through right now. And I think it's about time that the current and the future generations of Singaporeans start to learn to follow suit and also have financial stability and planning in their lives. And for you to do this, you will kind of need proper guidance and from professionals, and that is where these people called financial advisors come into the picture. So in this episode, I have one of my BMT friends, who's here to share with us with his experience of joining this industry and what he thinks about financial planning in general. So his name is Cokley, and he will be reading Business Analytics in NUS this year. So hi Cokley, welcome to the show.
Hey, thanks for having me here.
Alright man, and no problem. So Cokley, right, first things first, can you share more about yourself, how you joined this industry, and was there any so-called initial spark moment?
Okay, sure. So before I start, right, I just want to make this disclaimer, right?
Yeah, sure.
Everything I'm sharing here today is purely based on my opinions. You can disagree, okay? And there won't be any marketing involved over here. Okay. So a bit more about myself. So I'm from Advisors Alliance Group, a subsidiary group under AIA. Okay. So I've known AAG for around 8 months and officially start work for around 3 months. Okay. And like what Gerard has introduced, I'm going to study in this year in NUS. So I'm going to be a student advisor. Okay. Yeah. So I really love it in AAG because of the people I work with, because what I'm doing, and my clients are very, very appreciative of me. Okay. So as to how I come to know about this industry or why I joined, right? It's not like a spark, like a spur of the moment, okay? Okay, but it's an ongoing process. So why not share with you how exactly did I come to know AAG? I still remember that time it was one of my very, very good friend back in SCS, Sean. So he asked me to come down for this entrepreneur workshop, okay, in AAG office. So when I first arrived, then I said, it's an insurance company. And then all the PTSD, all the stereotypes all come in. Okay? Then I tell myself, okay, never mind. I go in with an open mind. And maybe I can learn something, or maybe this is really a good career. Okay? So little did I know that, okay, it really changed my life. And here I am as a student advisor in Advisors Alliance Group. Okay? So I remember there was this sharing by my executive director, Ray Tan. Okay? So he's a man of wisdom. When you hear him speak, right, you really feel very, very motivated. Okay, and he shared about his initial career as a financial advisor, the impact he made on people's lives, as well as the income potential of this industry. Okay, and to me, I want a high-paying job. Of course, everyone's a high-paying job. Okay, yet meaningful also. And that's why I go for AAG subsequent events and eventually decide to join them as an advisor.
Well, I'm pretty sure you would have put in a lot of thought and consideration, before like joining this industry. But like, can you share more? Like, what really made you, to like decide on becoming a financial advisor?
Okay, of course I've thought through it like very very carefully lah. Okay, because there were a lot of questions in mind. Will I face rejections? What will my friends think of me? Will they all like unfriend me after I join this industry? Okay, so after I considered carefully, actually there are three main factors lah. Three main factors why I joined this industry. Okay, first one is definitely family. I'm not sure if you know, I'm an only child in the family. Okay, and as to same right, as to a lot of older generation families, right, they all depend on their child for retirement. This is what they call the sandwich generation. I am their retirement. Okay, and my dad is currently in his 60s lah. Okay, 62 this year, and his health is not as good as before. He's working as a blue collar job. Okay, and after witnessing him going through a major surgery last year, okay, I want him to retire as soon as possible. And being a financial advisor is really one of the very very few jobs you can find as a student to be able to earn a sizable income. Okay, that was the major factor. Second factor, of course, is why I joined AAG and not other companies. It's because AAG really captivates me as a company that breeds this culture of abundance. Okay, what I mean by that, right? So they have strong mentorship programs, and you can find all seniors willingly and happily share with all the juniors about successful tips, about their failures, experiences, to make sure that the junior advisors can grow. Okay, there's no like secrecy of trades or backstabbing or any other negative cultures that we even experienced back in army.
There's no toxic stuff going on.
Okay, so over there in AAG, don't have such things. And I really feel that this company can bring me to a greater height. And AAG is also it's the first agency in Singapore to achieve 100 IDAT. Okay, what exactly is IDAT? IDAT is just an International Dragon Award. It's awarded to top advisors in the world. And with so many competent seniors in my company, I have no doubt I'll become one of them. Okay. Then last one, of course, is the purpose. Since young, I've been thinking next time, whatever I do, it must have purpose, it must have meaning. Okay, so I really see the purpose of financial planning after I've come to know about it. Okay, previously I thought, okay, just insurance. Every time got a road show, the female agent kind of approach me as an SF. Okay, so back in BMT I also have that. So I was thinking, just insurance, or everyone should have. Okay, but after looking through my parents' portfolio, my dad there was like, he has not a single financial planning. Not even insurance, not even investment, savings, everything don't have. I was like, it's not as common as I thought. After I share with my friends, my working out friends, all this, I realized that a lot of times they purchase plans, all this, without actually knowing what they're buying for. And just support friend or the agent say what, they just buy what. They actually don't understand the true meaning of financial planning. Okay, then I also reviewed for my friends' parents, realized that they haven't been doing anything about retirement. Because after they did savings for their children's education, their agent left the industry and there's no one to teach them, no one to let them know. So I feel that I serve a purpose as an educator, to educate people about the importance of financial planning and to impact on people's lives. So these are the three main reasons why I joined as a financial advisor.
I think like you have like solid reasons like why you want to do this lah. So I think like it starts from family, and from there whatever you have built on, I think it's like it will hold you in a good state when you like fully go into this career in the future. Okay, Cokley, I mean you have like shared a lot about why you wanted to join this financial industry and stuff like that. But I'm pretty sure like not everyone is aware of this financial planning. I mean that includes myself, and I think that's the case for most of us. So why not you like try to like share with us what this is all about?
Okay, sure. Okay, so I have to just say this part will be a bit drier but I'll make it as interesting as possible.
Sure.
Okay, actually financial planning is very very simple. Okay, and it's about implementing solutions to financial problems. And I like to call financial advisors financial doctors because help to treat the problems. Okay, so financial planning is actually broken up into 3 steps: wealth preservation, wealth accumulation, and wealth distribution. And I'll be going through with you all about these 3 steps. Okay. Firstly, wealth preservation. Like the name suggests, is about preserving the wealth, making sure that people's incomes and savings are protected. Imagine you have saved up $1 million. You don't want it to be gone overnight, right? Yeah. Okay. So Gerard, next time when you start working, you will be earning an income. Okay, and along the years, your income will rise, and your expenses will rise also. Okay, but as long as you keep having this income, right, there shouldn't be much problem. Assuming that you spend according to your income, if you're earning like 5K, you don't buy a landed property.
Okay.
Other than that, there shouldn't be much problem. Okay, but the problem only comes in when people stop working. And once you stop working, income is gone. Savings will be slowly depleted by expenses. And once savings is depleted, we fall into debts. And that's where you see people moving from landed properties to HDB flats. Okay, and you also see people not be able to afford children's uni education. Yeah, and I'm sure you don't want that to happen to your family, right?
Yeah, I mean, like, definitely not.
Definitely not. Okay, so over here, this is where financial advisors step in. Okay, and can you think of some possible reasons why people may not be able to work?
I mean, like usually like some health related issue, right? Or like some accident or something, or illness, and or maybe like retrenchment now, like there's like like COVID situation. Yeah, so probably like these two.
Yes, correct. Okay, so financial advisors help to implement strategies to replace people's income when disability or illness strike. Okay, we also advise clients on how much retrenchment fund should they have based on their financial situation, based on their income, based on how much they spend. Yeah, this helps to protect our clients from any factor that make them not able to work. And also allow them to achieve their goals. Okay.
I mean, so that's what wealth preservation is all about. And I think that's a quite interesting way to put like insurance into perspective, because I've not really like personally have seen it that way. But okay, sure. Then what's the next one now? Wealth accumulation, right?
Yes.
Yeah. So what's that?
Okay, so what exactly is wealth accumulation? Many of my friends also ask me, what's wealth accumulation? Okay, wealth accumulation is all about growing your money, and there are a lot of tools in the world to grow your money. You can put them in bank, you can put them in fixed deposit, you can put in bonds, stocks, and you can name a lot of others also. Okay, and they all give different returns, and whether is it guaranteed or non-guaranteed. Okay, but do you know that a lot of people, especially the older generation, our parents' age, they tend to avoid all these investments. Do you know why?
Not sure.
Not sure. Okay, it's because of this human psychological behavior. People or human, we fear what we don't know. Yeah, we fear what we don't know. So since they lack all this, like all illnesses or anything, or like aliens or this ghosts, we fear what we don't know. Since they don't know much about investment, they just avoid it all. Okay, and there's a problem over here. It's because today's bank's interest rate is around like 0.05%, or even the highest savings accounts around 1%. It's still lower than inflation. And every time we put money in the bank, each day, each year is rotting in value. Okay, and this is why you hear this saying, allow me to be blunt, okay? Rich gets richer, poor gets poorer. It's because rich people always know how to put their money into tools that can generate them a very high return, much higher than inflation. Okay, and the poor tends to lack all this knowledge, and they choose to put money in the bank, which makes them also poorer as inflation goes. Okay, so I see this purpose, I see us as educators to go around to educate people about wealth accumulation methods. Okay, we will analyze their life goals and propose suitable strategies based on their age, risk appetite, as well as when they need to achieve all these goals. Yeah, this helps them to achieve all their life goals such as retirement, and I feel very accomplished each time I secure my friend's retirement.
I mean, it's quite a meaningful like job. But actually, I have like a few doubts regarding what you said earlier.
Mm.
So I think the first thing is, right, I mean, you said investments are like, I mean, I think what people usually think is like investments have a certain degree of risk involved.
Yes, correct.
And so, as you said, right, rich gets richer, poor gets poorer. Like, don't you think like the rich people have like more freedom or like a bit of a leeway
Yes,
to
correct.
take that risk compared to an ordinary poor person? Not really poor, like a normal person
Yes.
who can make ends meet, but like taking maybe like doing an investment, right? Like the risk benefit analysis might be a bit too like extreme for him to like take that first step.
Yes, correct.
Because I think that's what a lot of people have concerns, right? Like, is investment really such a big risk?
Yes. So actually, investment. Yes, of course, all investments have risk. Okay, but like I shared with you previously, we analyze based on their risk appetite. So investment got some capital guaranteed, meaning you say that there's no chance they will lose money. Okay, there's also the
such a thing exists.
Yes, there's also capital guaranteed, which makes sure that your capital is protected.
Okay.
Yeah, and there's also the non-guaranteed part.
Mm.
Yeah, so for people that have high risk appetite, that means to say that they're okay to lose 20%, 30% if times are bad. Okay, and they will have the high risk investment. Okay, and investment has this rule of thumb usually. Okay, high risk will give high returns usually but not all will do so. Yeah, but if you find a good investment, high risk will give high returns.
Okay, then I think this brings me to another controversial question. I would say, how different is investment from gambling then?
Okay, so how different is investment from gambling?
Yeah, because I mean, if you think about it, risk factor is the same, and the more money you put in, more likely you can earn like many fold in terms of like if you win the lottery. Correct. But if you lose, you end up losing everything.
Yes.
So how exactly does the probability and all these things stand?
So both of them have risk. Okay, but gambling, when we gamble, actually we don't like calculate the actual risk. Yeah, we just let's say for example we talk about poker cards. We don't actually calculate this time what are the cards that I'm gonna get. It's all based on luck. Okay, but for investments wise, right, we calculate risk. Okay, we make sure that there's optimal risk. Okay, so let's say for this particular return, let's say 8% per year. What's the risk that's optimal? It's done through mathematical analysis. It's done through a research or this. It's often by professionals.
Okay.
Yeah, that's why I would say investment definitely carries a lower risk than gambling.
Okay, so like more of like a more well planned kind of a risk taking measure.
Yes. Okay. So it's like if you want to put in the gambling context, like you go into a game with all the good cards already. There's still a risk that you will lose the game, but at least you have calculated and make it optimal for you.
Okay, I see. Yeah. I think that paints a better picture of like.
Yes.
I think I had these doubts, and I think it's also people might have these doubts as well.
Correct.
So I think it's like quite important to like clarify them. Okay, so that is wealth accumulation, right? So the last part is wealth distribution. Okay.
So wealth distribution is usually for older people, like our parents' age, 50 plus, 60 plus lah. Because honestly, if you talk about us, what money do we have to give to people, right?
Yeah.
Okay. So wealth distribution, there are a few things. First thing is I'll educate people on the importance of will writing. Okay. There's another thing is called a lasting power of attorney. Is to appoint someone to take care of you when let's say a mental illness strike or coma strikes.
Okay.
Yeah, it's make sure that although you're still living but you're not able to make decision, then you appoint someone else to make decisions for you. Okay, and this is the one that a lot of people don't know. And last one will be inheritance planning.
Okay.
Yeah, so we have to show them what are the resources or what are the tools to leave money for kids.
Okay. And like so what exactly happens other than this?
Okay. So actually wealth distribution is quite complicated also because all these factors, all the consideration, who do you want to give all this? Okay, but let me show you this simple example to illustrate what exactly we can value add to clients with wealth distribution. Okay. So Gerard, imagine just imagine maybe you don't have imagine you have $1 million right now, and imagine you are in your 50s, then you want to leave this 1 million for your kids. Am I right to say that usually you will prefer to put them in safe instruments like bank, fixed D, which are like guaranteed?
Yeah, probably.
Because let's say you put into stock, what if anything touch wood happen to you on another situation like COVID, then your 1 million become 500,000, for example. You want that to happen. And that's what I see for a lot of older clients. They tend to leave inheritance in bank because they want a guaranteed amount to leave for kids, because they don't know when will they leave this world. Okay. Then over here, am I right to say that given current interest rate, right, let's say the next 20 years, 30 years later, from 50 to 80, am I right to say that the money you put in bank 1 million will not double to become 2 million?
Surely not.
Surely not, right?
Yeah.
Okay. And over here, we can implement this strategy to value add to clients by giving them something that's around triple the amount they put in.
Okay.
Yeah.
But why does that happen?
Okay. And that concept is called life insurance lah.
Okay.
And like what I say, I'm not marketing any plans here, but this is just a concept. Okay. And life insurance, to a lot of people, they thought it's just whatever I shared just now, wealth preservation. They have never thought insurance as a planning for legacy.
Okay.
Yeah, it actually can give you around triple the amount you put in.
So
and it is increasingly popular nowadays because people has come to know about this concept. Many financial advisors have educated people about this concept. Okay. And you may ask, why would I want to leave money only after I die, for example? Okay. But actually, because we haven't reached the parent stage, there are a lot of complicated factors, a lot of considerations, like for example, children scamming parents' money. That's why they want to make it that, I only want to give my kids after I pass away. And that's why it's increasingly popular among parents nowadays.
I think I kind of get what you're exactly talking about. And thanks for sharing what exactly financial planning is all about. I think it's pretty much enlightened all of us and given us a better understanding of this thing lah. Okay, so before we move on to the next segment, right? Can I ask why there are so many people nowadays, getting financial aid so early?
Yes. Okay, so actually, if you see around your peers, working out friends, or your cousins, relatives, right, you tend to see that as long as they have a job, they will have some form of financial plans. Then you'll be wondering what you wonder lah. Why are they getting it so early? There are actually two main reasons. The first one is insurability. Okay. Buying insurance is not like buying on Amazon, buying on Lazada, all this. I want this, I click, I add to cart, I can buy. It's not like that, okay? Insurance company actually take into clients or whoever that's applying health condition very, very seriously. Okay? So as long as you have some minor operations, all this, you may have a chance to be declined. And you have to live with the fact that for the rest of your life, you're not protected.
Okay.
And usually when you're young, like 20 plus, usually we are still at a good health condition. Tend to have less, what they call high blood pressure, high cholesterol, all this, tend to be less. Because we still exercise all this.
Yeah.
Okay. Okay. So that's why people tend to get when they're early, so that they have this insurability. Okay, second thing is more linked to whatever I shared just now, the wealth accumulation part. Okay, there's this concept which is called cost of waiting. Okay, let me give you this simple example. Okay, do you know that if someone, let's say person A, starts investing at 25 years old, person B starts investing at 35 years old, you're assuming a rate of return of 7%. Okay, at age of 65, person A will get double person B.
Although it's just 10 years difference.
Yeah, although it's just a 10 years difference. Okay, if you don't believe, you can go try the math later on. Okay. But it's really true. And this is the concept of cost of waiting. Each year you're waiting, you're losing all this compounding effect.
Okay.
Yeah. So the earlier you start, you're much better off as compared to your peers. And you can reach your retirement early. I mean, who don't want to retire early, right? Yeah. That's why this cost of waiting comes into play, and people want to start investing as soon as they can. And that's why you even see some students already start investing.
Yeah, I think it's important to plan all these things ahead lah. As you said, so that we can have kind of a head start in this work life and retirement life. So I see why exactly people nowadays want to have financial planning this early. Okay, so let's move on to our next segment, which will be a bit, how do I say, interesting, controversial, spicy. I mean, you can name a lot of things, but yeah, I think many people have this, social stigma against financial planning and like insurance plans in general. And so I would like to, ask you about some claims that you might identify them as misconceptions, and maybe you would like to clarify them based on whatever experience you have gained working in this industry for the past few months.
Okay.
Okay, so one of the most common things, right, that people hear, that I hear from people on the ground, is that insurance is entire insurance thing. It's a scam,
Yes.
right? Like you put a lot of money in, but eventually when you need it, you don't really get back the money that you want to get back. So what's your thought on that?
Okay, actually, for this sentence, I've heard it so many times. Sometimes that call me insurance is a scam. It's a scam. Don't talk to me about insurance. Okay. Actually, what is this claim arise, right? It's because of what happened in the past. The last time when the MAS wasn't so established. Okay, a lot of insurance company or a lot of insurance agents actually missell or they pocket the premiums, causing a lot of people who thought they are insured, but they actually are not insured. Okay, and this happens to a lot of our parents, and parents pass on this concept to their children, and making people feel that financial planning or insurance is all a scam. Okay, but I'd like to clarify that in today's world, especially 2020, MS has stepped up and has a lot of strict guidelines for financial advisors to be professionals, to be competent. Okay. And I would like to say that whatever scams or this is actually a thing of the past. In fact, in recent years, I've hardly heard about insurance scams or this. It's because people are becoming more and more competent. Okay. And I would like to use the example, like for example, Japan. Okay, Japan was hated after World War II, right? Because of what they did. Okay. But today, look at Singaporeans. All of us love ramen. Okay. We eat curry chicken rice from Japan. We love Japanese food. We even buy their products or this. Okay. It's because Japan is no longer who they were last time. And same thing applies to financial advisors. Okay. Financial advisory today is no longer something that was in the past. Okay. I feel that people should be more accepting. Okay, and realize the fact that times have changed, and advisors today have also changed.
I mean, that makes a lot of sense, but I think some people just can't get rid of their past experiences of them.
Yes, I totally empathize with that. Like for example, let's say you go to a food store, the food tastes so bad. I mean,
one time tastes so bad.
One time you won't go ever again. Okay, so it's perfectly understandable. So usually I will just explain to clients or clients' parents slowly and making sure that they understand that today whatever I'm sharing with them is valid. It's not a scam.
Okay, so the next claim is there, right? Like you guys, like financial advisors, right? That's the umbrella term to use. You earn easy, loads of easy money, and like kind of rip off people. So how true or like untrue is that particular statement?
Okay, so same for that statement. I've heard it a lot of times. Okay, so actually, what they don't see, right, is about whatever we have put in as financial advisors. I'd like to use this quote by Michael Jordan from Last Dance Netflix. He said this: "It's funny, okay, but everyone wants to be Michael Jordan for a day or a week. Okay, but let them try to be Michael Jordan for a year and see if they like it. Okay, and I don't think they will quite like it lah. Okay, same thing for financial advisors. Every time after we achieve awards, after we achieve success, people only see this successful side. But what about the pre-success days? Okay, they don't see the amount of effort we put in to improve ourselves, to increase our competency. Okay, they don't see the amount of effort we put in to, let's say, advise clients on financial planning, assisting them for any claims. All these are services that we provide to our clients, which a lot of times people tend to ignore it. They only look at the successful side or easy money, but they tend to neglect whatever efforts that we have put in.
Well, I think that's quite important thing to clarify because a lot of people think that it's like what it is, and they don't really see the big picture.
Yes.
They just see tip of the iceberg, but they don't see all of those
Correct.
things below it. Okay, so there's another claim out there that says only the rich people need financial planning. So is there like a certain degree of truth to it, or is it wrong? Because I think it's quite wrong.
Actually, it's really very, very wrong. It's actually the opposite. Okay, so very simple. Okay, to you, if someone has $1 million in bank compared to someone who has 10,000 in bank, who is more likely to go into debt if, let's say, an illness strike or hospitalization occurs?
The guy with 10,000.
The guy with 10,000.
Yeah.
Okay, that's exactly. Okay, I always believe in this sentence. Okay, if you can't afford to be sick, you better have insurance. Okay, because we don't want our family to be in debts. And that is why actually, if you're not so rich, there's a greater need for insurance to make sure that nothing will happen to your families.
Okay, I mean that makes a lot of sense, lah. So moving on, right? Another group of people think that they will do this financial planning for themselves by themselves.
Yes.
Like they feel that there's no need for like professional advice from like professional financial advisors like you. So what is your take on that?
Okay. Of course they can do that, right? It's like same thing for studying. Let's say you learn maths. You can either learn it from your teacher or you can learn it yourself. Yes.
Yeah.
So same for financial planning. A lot of people can do themselves. Okay, but the key question is, should they? Okay, I always believe in this concept, comparative advantage. Last time JC right? Comparative advantage. So you look at Singapore. Okay, we are very bad at producing our own food, but we are good at providing services. That's why Singapore always focus on providing services, improve our education. But we have never tried to compete with other countries like Malaysia in growing of, let's say, fruits, food, or this. We don't do that. We buy from them. Okay, so I feel that the same thing should apply for financial planning. Since people's career are usually, let's say, they are engineers, doctors, who are not so savvy in financial planning or financial info, okay, they should outsource all these things to financial experts so they can save all these times on research or let's say on crafting out their own plans, and they can put them into better use. For example, family time, spending more time with families, okay, and maybe get a promotion or putting more time and resources into their own business, which may be even more beneficial to them as compared to putting time into studying or researching about investments or this.
I mean, that's a quite solid point, lah. I mean, make use of these guys when they're right here. Why waste your time and energy trying to do these things on your own? Okay, so the last assumption, right, is that I want to talk about is a lot of people think that once they're like fully covered for a financial planning, once you do it like once and that's it. So is that assumption valid? It's like doing once, like planning once, is that enough?
Okay. So actually, a lot of people may disagree, but actually financial planning, just having one plan or one strategy is insufficient. Okay. So a lot of times my friend will tell me, oh, I already have insurance, or I already have plans. But actually they only have one or two. And they thought they are fully covered. Okay, I would like to use this analogy of eating, for example. Let's say I eat today for lunch. Okay, although I'm full now, but I still have to eat dinner, right? Yeah. Let's say I eat for today. Tomorrow I still need to eat, right? Okay, so same thing applies to financial planning. Although someone may be fully covered at that point of time, maybe for the next few years you don't need to do financial planning. But as his needs evolve or circumstances change, let's say having more children, or maybe the income drop or increase, they will need additional strategies to protect themselves. And this is what people often do not see.
So it's a need for like a constant review, lah.
Yes, correct.
Right. What's your recommendation for like every how many years?
Okay, so usually for financial advisors, we review clients' portfolio every year. Because every year there's a chance of promotion or there's a chance of demotion, hopefully not lah. Okay. But we have to review constantly. And every year you can also see maybe, let's say, if the person's wife is pregnant, for example, having another kid will need additional financial planning. That's why once a year is often preferred.
Okay, I mean, that's a very good analogy at first, and you've answered this quite well. And actually, I think about it, I think there are a lot of misconceptions out there, and if you were to talk about every single one of them, we're going to stay here for hours and hours.
Yes, correct.
So, but I think I've kind of like asked him about the 5 big misconceptions out there, and I think that's a good starting point. And if there are any more, I think people can just like contact you directly.
Correct.
All right. So I think with that we have pretty much come to the end of this episode. So before we end, why not you like share some parting words with everyone?
Okay, sure. So I will end off this session with a quote that my founder of company AG always like to say, okay? To be successful in a profession or business, to become wealthy cannot be compared to making the lives of a fellow man better. This can bring immense satisfaction. Okay, this is actually a quote by late Minister Mentor Lee Kuan Yew. And my founder loves it. Okay, and I also resonate a lot with it. Because I really enjoy helping people. And this line of business allows me to achieve that. Okay. This career helps me to make sure that for the rest of my friends' lives, they can be free of any financial worries. And I can really see the future of us retiring comfortably together, making sure that our kids have the best education, best quality of life. Okay, and I really see this as my purpose in this career. Okay, and I feel that I have nothing to complain about this career at all because I have this passion and this compassion for others. Okay, and I feel that next time for everyone, before you look for a job, make sure that whatever you're doing is making an impact on people's lives. And I feel that you'll never ever quit a job because it's not just a job to you, it's really a career. And I feel that that's the difference between a job and a career. Okay, and if after hearing whatever I shared about financial planning or being a financial advisor, you feel inspired and you feel that you want to work with me together to impact more lives, okay, you can always follow me on Instagram, KOKIEXD, or you can contact Gerard and he will link it up with me. Okay, and of course, if you feel that you want any advice on financial planning, feel free to approach me also.
So yeah, I hope you guys have like learned something about financial planning and like the importance of insurance. But then again, I mean, we are not here trying to sell any insurance plans or like to like convince you guys to of course buy this plan or like join this company or anything. As Cocky mentioned earlier, I think it is pretty important to be financially aware and also be like financially healthy, especially like in the near future because of these drastic changing circumstances that we are going through in the world right now. And I think many people actually do not talk about this thing called financial health, but I think it's as important as your mental and physical health, because if you come to think about it, like eventually, right, on everything that happens in our life is sort of a transaction, and all of it kind of involves a particular cost, and like almost in 75% of the time that cost is usually money. So I think if we can be secure about our financial future, we can kind of live our day-to-day lives more peacefully and without any worries. And I think that's why we kind of did this entire like podcast sesh. So yeah, but I think that's it for this episode. Thank you, Cocky, for being part of this.
Thank you so much.
Yeah, like really appreciate it, man. So yeah, and that's it for today, and see you all next week in another episode with in another topic basically. And till then, goodbye. I think that's a good job, I think.
Okay.
Finally we are done.